Hey there, everybody. Thomas Wood with Basecamp Trading. It is Friday, February 16th, and we're going to talk a little bit about a strategy that we use in the trading room. And it's a strategy we've had for years and years because we are the creators of value charts and we have that patented technology. But it's one of the best tools we can use for helping to time entries. Now, for those of you that are not familiar with what value charts and value bars are, that's what's painting the price bars here. Okay, and if we get upper yellow or upper red, that's moderately and significantly overvalued. If the lower portion of the bar is painted, that means it's moderately or significantly undervalued, according to the color codes. Okay, and then green is just fair value, just normal price action. So it's essentially telling us when markets are getting extended one way or the other. Now, we've also talked about in previous videos what the MQ trend indicator is. MQ trend is this indicator right here. Green dots are bullish, or red dots are bearish, and it's helping identify, it's using chandelier logic to help you identify where the trend of the market is. Now, this is a strategy we've been using, especially here recently with the volatility on a 2-minute price chart in the S&P to really great results past several weeks. So what we look for is you look for a trend. Once you've identified trend, you then look for a retracement against the trend. So if you're in an uptrend, you're looking for value bars to pull back and get undervalued like you do here or here. Okay, if we're in a downtrend, we're looking for value bars to get overvalued like we do here and over here. Now, once that trend has started, okay, once we've pulled back, the trend has started and we've pulled back into overvalued for a downtrend or undervalued for an uptrend, we then look to enter on a break of the previous bar's high or low with their stop above the retracement and look for the acceleration to continue with the downtrend. And we want to verify all of this by looking at price action and going back and determining trend with pivot highs and lows, because that will help increase your probabilities of success. So we're triple verifying. We're going MQ trend indicator for trend direction, price action for trend direction, and then retracement using value bars. So we're using 2 different indicators and then price action. Once it's pulled back, after it breaks the previous, so if it's bullish and it pulls back into undervalued, we look for a break of the previous bar's high and then look for it to accelerate higher. That triggers our entry. So for example, here, you pull back undervalued, you get long, it starts to climb, you move stop to break even, it pulls back, you're out at even. Second time it pulls back undervalued again, trend is still up, we're still higher highs, higher lows as a whole. You buy on a break the previous bar's high here, stop below the low, it accelerates, you move stop to break even, and then you can hold on to it for the bigger run. And you're taking off half profit at the opposing value target typically. Once more, you pull back undervalued here, break the previous bar's high, that triggers your long, accelerates higher, move stop to break even, first target hit, pulls back again, undervalued, rally, undervalued, rally. And now in this case, the reason we want to make sure we're waiting for it to pull back to to trigger the trade by breaking the previous bar's high after it's retraced is for situations like this, where it starts to run lower and it hits undervalued here. And if you were just blindly buying undervalued, you had a nice losing trade there. But if you're waiting for it to trigger by breaking the previous bar's high, you never had a trade because it never did that before breaking the previous pivot low and changing trend. Now, it changed to a downtrend here and you pulled up overvalued. And as we're talking, it's about 1:15 in the afternoon on Friday. You would have had a sell here on the break the previous bar's low. It's starting to accelerate. So you'd move your stop down to break even. And as soon as it gets down near the previous pivot low and we get extended here with value once more, we start taking half profit and allowing the second half to run. All right, so this is just a really simple strategy and it can be used on any time frame for timing entries. So let me show you what I mean here. Let's go back to the 240-minute price chart, for example. Here's your 240-minute price chart. Now, when we're trading off of 120s and 240s, we typically are not going to be using MQ trend for determining trend directional bias. We'll be using price action. Okay, so we're looking at pivot highs and lows. If we have higher highs and higher lows, we'll be buying undervalued. If we have lower highs and lower lows, we're selling overvalued. Now, here recently, obviously the volatility, we've been kind of choppy. We were downtrending, then we went into compression, and now we're uptrending the past week or so. However, if you go back and you look at how this works when the market was trending really well, wasn't in a compression or highly volatile state, on the longer time frame charts, you're buying undervalued dip here, buying undervalued dip here, buying undervalued dip here, buying undervalued dip here. And I'm not trying to cherry pick anything. I'm showing you actual charts here with a couple different time frames. I'll show you a couple different markets here as well. So let's go look at, for example, gold. Here's a 240-minute price chart. Look at your extended level. So when you're in an uptrend, wait till you pull back undervalued, and then you're buying. In an uptrend, you're buying undervalued. In a downtrend, when we're going lower highs, lower lows, you're selling overvalued. Selling overvalued. All right, so great way to trade. Very simple, effective strategy for trend following. Again, that's using the value bars indicator or the value charts indicator and NQ trend combined with price action reading. So you want to learn more about that, you can shoot us an email. If you want to get the indicator, shoot us an email at support@basecamptrading.com. We have it on TradeStation, NinjaTrader, MultiCharts, eSignal, Sierra, Infinity, TOS, Bloomberg, all over the place. So that's it for now. I hope you enjoyed it. Don't forget to like and subscribe. Have a great holiday weekend. We will be back in the trading room on Tuesday of next week. And until next time, everyone, happy trading.